Okay, here we are. We're back at 7. Now this one you're going to go, oh my goodness, what do I do with it? But it's not that bad. What you're looking at here is, these are the jobs they started. This is the status of the jobs they started. And what we're asking for is what's left in working inventory. Well, that's really simple to look at that. This is working inventory. This is finished goods right here. You've got 65, 42, and sold. Okay, so what's your cost of goods sold? Well, this is the cost right here. So if those were sold, those two are your cost of goods sold, which will give you a total of 17,500. And the next thing they ask is, in 8, I guess it's not the next thing, it's a different one. Okay, so these are journal entries. And again, you're just going to follow what they're asking you to do. You incurred and paid website expenses of $2,100. So here's your web expenses. You want to increase them, and you use cash for $2,100. Manufacturing wages was $1,700 as a debit, and cash payout of $17,000. I'm sorry, both $17,000. You purchased materials on account. You're going to increase materials inventory, and you're going to credit to increase your accounts payable by $15,000. You have work in process. Let's see, D. Work used in production. Direct materials, $9,000. Indirect materials, $1,500. Well, as we've not done all the way throughout this entire exercise, indirect materials go to manufacturing overhead. Work in process receives the direct materials that combined together creates the withdrawal from the materials inventory. E, they assigned $17,000 of labor to jobs, 55% of which was direct labor and 45% which was indirect labor. So again, indirect labor is going to go into the manufacturing overhead, and then the direct is going to go to the work in process. F, they recorded manufacturing overhead, depreciation on plant, plant insurance, and plant property tax. So what have they got here? You've got manufacturing overhead, which is going to be a total of all of these, because they're all indirect costs. For G, let's see what G is. Allocated manufacturing overhead to jobs, 160% of direct labor costs. Well, what were your direct labor costs? We have to come up here and find the direct labor. Here's direct labor was 55% of $17,000. So 55% of that times this 160% should give you a total of, let me find it here, that's $93.50 times 160%. So the direct labor is $9,350. And again, what are you doing with that? Where are we? We are in G. So that's right here. Your work in progress and your manufacturing overhead. So work in progress gets debited and manufacturing overhead gets credited, and that's an allocation now, remember. So now the next one we're looking at completed production of $32,000. So what are we doing? We're taking it out of work in process and putting it into finished goods inventory. So it's just credit here, debit here. And I bet we're going to sell something. And then we sold inventory on account for $24,000, and the cost of goods sold was $16,000. So if we come down here, we're going to get a sales of $24,000. It's going to go into accounts receivable for $24,000, and then we're going to set up the cost of goods sold, and we'll take that out of the inventory. And those are the inventory journal entries that you would have. They're fairly typical, just to kind of give you an overview of how that works. And I think we have one more here. And this is how you can use job costs to decide on what you would charge for a job. And this is fairly straightforward. You are going to compute Sims's hourly direct labor rate and indirect cost allocation rate. And to do that, you're going to take these numbers up here. The direct cost rate is really fairly easy to figure out. You're going to take 2,150,000 and divide it by that 14,000 hours, and that's going to give you your direct labor costs right there. Then you're going to take this would be your indirect, right? The office rent, the salaries, the utilities. And that's going to give you your indirect costs. And you are going to, okay, so you have 1,460,000. You are going to use the estimated indirect or estimated direct labor costs to find out the percentage for the predetermined indirect cost. And you would divide 1,460,000 by the 2,150,000 to come up with a percentage. And that would go right here, just to help you visualize this. And that's going to give you a percentage so that you can predetermine an allocation rate. So the predicted cost is going to be, what are we predicting here? It's going to take 260 direct labor hours. So we're going to figure this up. You had 260 hours times the direct labor cost per hour. Then you would have, take that number, you would take the direct labor total times the predetermined indirect rate that you calculated right here. And that would give you the amount of indirect costs. And then you would add those together and hopefully come up with $67,264. So on the third one, they want to earn 55% of the job's cost. So you would take the predicted cost here, you would multiply that by 55% and put that number here and come up with hopefully $104,264. And that would give you the bid cost.